But if LTCM's on one side of the trade, they've got some other hedge fund or maybe another bank or somebody in Europe on the other side. And they're...
In this interview, Jim Rickards shares a gripping account of the 1998 long-term capital management LTCM crisis and its potential global impact. He delves into the high-stakes negotiations and frantic efforts to prevent a catastrophic financial collapse. With a $15 billion risk arbitrage book, Rickards reveals the behind-the-scenes scramble as major players like Goldman Sachs, JP Morgan, and others convened under pressure from the Federal Reserve. Rickards discusses Warren Buffett's involvement, the last-minute negotiations, and the intense collaboration despite deep-rooted distrust among Wall Street firms. Ultimately, a term sheet was crafted, narrowly averting a worldwide market shutdown. Rickards paints a vivid picture of the chaotic, high-pressure atmosphere where deals were struck and the fate of global markets hung in the balance.
We were fine. You go back and look at all the deals. MCI WorldCom, Boeing Lockheed, there's Sydney Travelers. All the big deals at that time, we were 4.9% of all of them. So we had a $15 billion risk arbitrage book that nobody even knew existed. Now, you're a counterparty to us. You're whoever, Morgan Stanley, Bear Stearns, or I'll tell you the story about Bear Stearns. So all of a sudden, LTCM goes out. So these guys, they're all dealers. People think dealers speculate. They don't really. They take two-sided positions. They're in it for fees and spreads, and there's risk. But if LTCM's on one side of the trade, they've got some other hedge fund or maybe another bank or somebody in Europe on the other side, and they have a two-sided position. Well, if one side just goes away, you're naked, long or short. You got this one side, and you got to go cover. Well, imagine everybody on Wall Street trying to cover $15 billion of equity in an hour, because that was the reaction function. So Peter, he was a bond guy, but he understood this and he knew it. So he said, we got to. So he went back to New York. This was on a Sunday, our meeting. He went back to New York. He met with, I think it was Sandy Warner, who was head of JP Morgan at the time, and John Corzine was at Goldman. And I think there were three guys. I think it was JP, Citi, and Goldman. And they said, we got to do something. So then they called around. So there was a meeting at the Fed that Wednesday night. This is all the last week of September. And they got everybody in the room, and they just kind of said, you have to do something. But to your point, Jeff, they weren't bailing us out. They were bailing themselves out, because I said, if we went bankrupt, I could just sleep in the next day. It was, it wasn't going to affect me that much, but I was losing money, but, there was nothing else to do. But you guys are going to have actually the derivatives position were $1.3 trillion. That was the notional value of the derivatives position. So I get to sleep in. You guys have to cover $1.3 trillion in a totally illiquid market. So they understood that. So Wednesday night we got a term sheet. Wednesday to Sunday, nobody slept. It was funny. We're scatting they were not like. Nobody was in charge, by the way. I was in charge of our team. We had a couple law firms. But on the other side, there was no lead bank or single bank. The Fed, once the Fed got catalyzed the bailout, they washed their hands of it. Everybody left Liberty Street and walked across to the Merrill Lynch headquarters at the time and took it from there. So, and they didn't trust each other. I mean, Wall Street, they hate each other. So they were being, it wasn't quite a gun to the head, but they were being forced to collaborate for their own good, even though nobody trusted anybody. And then there was sometime in those 3 days, fax comes in. We still use fax machines at the time. And it was a term sheet signed by Hank Greenberg of AIG, Warren Buffett of Berkshire Hathaway, and John Corzine for Goldman Sachs. So it was a three-party term sheet saying, we'll buy out the whole thing. But you guys all get fired. They were going to use AIG Financial Products to run the book. Buffett was going to put up the money. Goldman was going to be the dealer, and they were going to save the world. So JM hands it to me. He goes, what do we do with this? I said, well, I have to respond. You can't just blow off an offer. It doesn't matter whether you like it or not. So I called Buffett's lawyer and I said, look, what you want to do is not feasible. Just be clear. I'm not saying no. I'm saying the way you want to do it is not feasible because it was a what they call hub and master feeder structure. So there were actually 9 funds you could invest in, and all the money funneled down to the trading book. They wanted to buy the trading book, but I said, I got 9 partners. I got to go to all of them and get permission for this. I said, but here's what you can do. We'll form a new company, make it a new feeder. You put the money in. You'll own 95% of the book at that point. You can do whatever you want because you'll have the votes. And the lawyer, he was a good lawyer. He said, well, Buffett told me that you couldn't vary the terms. Take it or leave it. I couldn't vary the terms. I said, well, get him on the phone. But Buffett was on a fishing trip in Alaska with Bill Gates, and they didn't have any cell phones. I think they had satellite phones, maybe, but I'm sure they did. But they were basically incommunicado. So the lawyer said, I can't get him. I said, and he said, I have no authority to change the terms. I said, well, let's be clear. I'm not saying no. I'm saying this is not feasible. And it's, okay, nothing done, and that was that. But here's Goldman. My point is, here's Goldman, part of the consortium, right? But at the same time, they're doing a side deal with Buffett and AIG. So, typical Goldman, you're on both sides of the trade. So we worked night and day. First day the jackets come off, second day the ties come off. No, ties come off first, then the jackets come off, then the shirts are unbuttoned down to the waist. No one's bathed, and it's just we're working around the clock. So we got it done. But here's the point. We got it done late on a Sunday night, just before Tokyo opened. If we had not got it done, if that had not been issued, every market in the world would have closed. Sequential, starting in Tokyo, London, New York. We had a bankruptcy room, like in our office, like 5 different teams. There was a bankruptcy team, a tax team, a deal team, et cetera. And I would just I was like a doctor, make the rounds and check in on everybody. But the next move would have been to file for bankruptcy, and then that would have been announced, and we know what would have happened. Every market in the world would have closed.